Today, we'll be discussing one of the famous book called as How I Made $2 Million in the Stock Market by the author Nicholas Darvas. One of the great and exciting book which has interested me a lot, right? After completing this entire book, I thought, let's make a summarized version of this book. So whoever are aspiring traders or aspiring investors, this should be a wonderful book to start with. Because a normal person who is a dancer, who has turned himself into a stock market wizard. Yes, I'll be calling him as a wizard. The reason being, the kind of challenges he has faced, the psychological problems, the solutions which he has found out, and how he was able to mold his investment decisions in a way to ensure he has made his $1 million, $1.5 million, even $2 million he has touched in the stock market by simple procedures. The main key aspect here is how he was able to stick to a particular system is more important, right? So what we do in our earlier discussions or in our majority of our sessions, we discuss more on averaging up. So the one key rule for a beginner or someone who is very experienced, either you're a beginner or you're a pro, the one rule you have to follow is win big when you're winning, lose less when you're losing, is also the key principle he has mentioned in this book, right? So when you're winning, keep averaging up, keep increasing your position sizing. And when you're losing, cut short your losses as soon as possible. And yes, second learning from his book is how to be in the sector or in the stock which is trending, right? As I always say in majority of my sessions, trend is your friend, right? So sail your boats in the direction of wind, right? Trend is your friend. And third most important point, whenever you are investing or you are trading, always be a lifelong learner, right? Always reassess your trades, reassess your strategies. Market is something which will always give you new implications, right? So always learn from your mistakes and grow, right? So let's deep dive into the summarized version of this book. Okay, so without any further ado, let me quickly share my screen, right? Let me quickly share my screen and let's start the discussion on the book review of How I Made $2 million in the stock market by author Nicholas Darvas. So what we will do, we'll just have a quick introduction of this book. We'll have discussion on key challenges and principles, how to ride the winning trends, right? Which means riding the winning horses. What is the box theory, right? What is the breakout and the breakdown zone? What are some of the inspirational quotes from this book? And what are the key lessons for someone who are aspiring to become a trader or an investor in the stock market? This should be a clear roadmap for all of you. So to start with, Nicholas Darvas is a dancer and transitioned himself into a successful stock trader, right? So in this book, if you go through it, he was practicing his core profession and parallelly he's punching his orders with the help of a broker, right? So the wonderful thing in stock market is it's not immediately required for you to become a full-time investor, a full-time trader, leaving all your jobs or leaving all your works. No. The best part is if you develop a system, if you develop a process and you stick to it. I repeat, it's not about a system or a process. It's not about developing it. You stick to it. You can do things which you are already doing. Sir, I'm a working professional. Can I succeed in the stock market? I'm a business professional. I have a business to manage. Can I succeed in stock market? When Mr. Nicholas Darvas is able to do as a dancer, continuing his profession, when he was parallelly able to succeed in stock market, everyone can do it. That's the uniqueness of stock market. But that happens if you stick to a process, if you stick to a system, right? And we'll also discuss in this upcoming discussion on what is the significance of Darvas' success in the stock market and what are certain things we have to implement in our day-to-day trading. Some of the challenges which he has faced. Yes, every investor or every trader in the stock market will always face one or the other challenges. Like how you have faced or how majority of the people failed, he also have faced initial struggles in the stock market, right? Entering into wrong companies, having limited knowledge and experience as a beginner trader, right? Even when you're playing any game without understanding the rules, without understanding the boundaries of the game, if you're entering into it, it's always a risk. Similarly, in stock market, you need to upgrade your knowledge, ensure you become a lifelong learner, ensure you learn and you're open to new ideas. That will make you to succeed in the market, right? He also had initial frustrations and setbacks faced in his early trades, right? So yes, sir, I've had some wrong trades which I've entered, right? I was stuck in a trade and I'm frustrated for a couple of months, couple of years, right? He also have faced the same challenges. Let's see how he was able to overcome those, right? Some of the key principles which he has followed in his entire investment process is he was able to focus on price and volume, right? Price and volume. Yes, volume is something where no one can hide. People can change the financial details about the company. People can work on the fudging of data. But volume, the number of buyers, the number of sellers, no one can touch on it, right? So the key principle in this book is when the price and the volume both are congruent, both are very strong, that is where you have to add more into the positions. Second, cutting losses quickly to protect your capital. I've entered into a position. It was a wonderful analysis. I've spent almost 2 months, 3 months analyzing on the stock. Because of some reason, the stock has fallen down by 10%. I'm still waiting what to do. The stock has further fallen down by another 10%. I'm at a 20% loss. I'm still waiting that it will bounce back. There is no hope story in stock market, right? One of the key principles mentioned here is cutting losses quickly to protect the capital. As soon as possible, you have to come out of your losing trades. Third, core principles that guided Darvas' trading strategy is when you are winning, win big. So the stock has come to a 52-week high. The stock is right now at an all-time high. The stock is at a lifetime high. Can I enter? During a strong trend, when the entire sector is also trending, you have to average up. You have to increase the winner. In the last 1 year, 1.5 years, or even the last 2 years, if you have just been following our discussions, if you have just been following our sessions, right, we have focused heavily on defense as a segment. The entire sector is strong. There is a lot of focus by the Indian government on defense expenditure. It was core belief, and the defense ministry itself has spent more focus on indigenous manufacturing. So there is a lot of funds flowing into it, and domestic manufacturing, make in India theme. So majority of the defense companies, yes, it was at a 52-week high, lifetime high, all-time high, but still it has advanced, right? If you look back in our sessions in the last 1.5, 2 years, many companies like Hindustan Aeronautics Limited, it was a 6x for us. Mesogon Dock was a 4x. Cochin Shipyard was a 4.5x, right? These are all multi-baggers because you have to follow your system. A trending sector, a trending stock, you have to average up. Your public sector unit banks, your railway as a sector, right? When the sector and when the stock is in a clear uptrend, just follow your core principles and riding winning trends, right? Winning trends. So these sectors on defense, PSU banks, or even railways, right? Automobiles, let your profits run, right? Let your profits run. Have a systematic approach. Sir, I'm following a company on a long term. Like, for example, Hindustan Aeronautics or Cochin Shipyard is a long-term company for me. Or Solar Industries in the defense theme is a long-term company. If you are looking on a weekly trend, weekly charts, have a systematic approach, right? Have a systematic approach. On a weekly time frame, if a new high is formed, you just increase your position. That's called as position sizing, right? Following trend. When there is a lot of focus in the defense sector, right? You had like Russia-Ukraine conflict. Iran-Israel conflict, when there are geopolitical tensions, yes, on the defense, there will be a more focus, right? So follow the trend. And riding winning stocks is more important. There are majority of the investors I see, sir, I've entered a stock, I made a 4x returns or a 5x returns. But when the initial capital I've added X amount, after that I did not add into that stock. That was my mistake. That was not a mistake, that was a blunder, right? If you have identified a strong stock within the strong sector, you have to ride the winning stock, add more into it, increase your position. That's why I always say, before you look at stocks outside your portfolio to add more, first look within your portfolio. Sir, I have 15 stocks which I have already invested. Before you search out for investing into stocks outside, where we have like 5,000, 6,000, 7,000 and more companies in NSE, first look within your portfolio where you had the opportunity to add more. Yes, within the portfolio, I have 1-2 stocks which are very strong. Every opportunity, I add them. And then you go out of your portfolio, right? So ride the winning stocks. And yes, box theory. Nicholas Darvas followed a box theory for identifying trading ranges, right? For identifying trading ranges. So as I always say in my sessions, let's say a stock is consolidating like this, right? A stock is consolidating for a very long period, right? So this is called as a box, right? This is called as a box. This is called as a rectangle. We call it as a consolidation. We call it as a basing, right? Basing. So whenever a stock is consolidating or when it is forming a base, we need to identify the breakout points, right? Identifying the breakout points for entering. So this point is the point for you to enter, right? Is the point for you to enter. And from this point, if it is breaking down, this is the point for you to exit. I repeat, whenever a stock is consolidating or forming a base or forming a rectangle, right, or forming a box, whenever it is breaking out, when it is a breakout or when it is breaking its resistance, right, this line is called as your resistance. When it is breaking out your resistance, that is a good entry point for you. And when it is breaking down, this is called as your support level. This would act as your exit, right? This would act as an exit. And yes, averaging up Darvas box for adding more into the stocks. Yes, sir, I was not able to catch this stock. The stock has advanced, right? The stock has advanced. And after a period, it is again forming a base, right? It is again forming a base. So this is your next Darvas box, right? This is your next Darvas box. So you add more, right? You add more when it is again breaking out, right? Again breaking out. So this box theory is for identifying the range and identifying your breakout points for entering or exiting the trades, right? Exiting the trades. And yes, some of the psychological aspects mentioned in the book. Avoid emotional trading. As I always say, do not fall in love with the stocks. Just date the stocks, right? Sir, I have invested in a company. I am working in that company. I have worked in that company. My father is working. My relative is working. So I think this is a good company. I've heard good things about the company. So even though it's not giving me returns, I continue there. No emotional trading. Sir, yesterday I have lost 5% in market. Today I will go in, irrespective of the market opportunities, I will recover my money. That's called as emotional trading. That's called as revenge trading. That is what you need to avoid, right? Wait for opportunity. A good batsman wait for the correct ball to hit the ball to the boundary. He will not hit all the balls to boundary. That is where he get bowled, right? Avoid emotional trading. Avoid revenge trading. Maintain discipline and patience, right? Have a clear process. Have a clear system in your place and maintain the discipline, maintain patience. If the market is not very conducive, if you see Indian market is very good in the last 1.5 years, but there are some geopolitical situations, scenarios, some tensions. even US have had a decadal inflationary highs. So yes, we do not be very aggressive when global market is bleeding, when there is money going out of the Indian market. So certain days we stay out of the trade for short-term investing. So maintain the discipline. Sticking to predefined trading rules. Yes, I have a trading rule. If any of my entry, the first purchase, if I'm losing 6% or if I'm losing more than 8% from the initial price, or if it is a wonderful company, a fundamentally good company, if it is bleeding more than 10% from my initial purchase price, I do my exit. I follow a strict predefined trading rules. So follow that predefined trading rules to succeed over a longer period of time, right? Over a longer period of time, and have a clear systematic approach, right? One, have a clear trading plan. Your entry and exit rules are very important. Have consistency, following a systematic approach, right? Do not change your strategies, do not change your process for every now and then, right? Have that consistency. Strategies, adapting based on market conditions, right? So you have to always evolve. You have to always be open to new ideas, right? Adapt your strategies based on the overall market scenarios, right? Some of the inspirational quotes which we can take from this wonderful book is: the elements of good trading are cutting losses, cutting losses, and cutting losses. If you can follow these three rules, you may have a great chance in the stock market. One of the very important quote, right, was: I was successful because I was able to detach myself completely from the losses I had incurred. I was confident I could win in the end, right? There are people, sir, I had few losses earlier, so I think stock market is not for me. I think I cannot understand the nuances of stock market, right? Losses are imminent for an investor or for a trader in the stock market, right? Detach yourself from the losses what you have faced. Keep learning. You will win because you have to have your confidence. That's why I always say, do the affirmations, read the goal card. You have to have your strong why you are there in the market. The next quote: I'm only successful because I am ruthless. I do not believe in dwelling on hopes at all. Yes, a stock has hit your stop loss. You be ruthless in cutting your losses. Do not be in the hope, I think this stock can come up, right? I think the government will save this company. I think the founders are very strong enough, it will bounce back, right? Do not have hope stories in the market. That too for your short-term trading, for your swing trading, for your momentum investing, right? Do not have any hopes. Do not be in that hope story. Be ruthless when a stock has touched your stop loss. Third, the only sound reason for my buying a stock was that it was going up, right? When the stock is trending, when the stock is picking up, when the stock is increasing in the price, and there are strong volumes that are coming up, that should be one of the sound reason for you to enter into a stock. That's what we call it as averaging up, right? Averaging up. And if you are a aspiring investor or an aspiring trader, some of the key lessons from this book, which are like 12 important lessons which I have summarized, let's discuss on that. First, focus on price and volume. Second, cut your losses as soon as possible. Third, let your profits run. Develop a systematic approach. Adaptability is the key, right? Adapt yourself to the market environments. Emotional discipline is very, very important. 7, record keeping, right? Keep a journal. Keep your entries or your exits, why you are adding, right? Maintain a record. Interpret market signals, right? So that's why when you are open to the market, when you are learning, when you're open to new ideas, you'll be able to interpret. Stay informed. Sir, I be in the market for 1 month and another 1 month I'm completely away. No, even you're too busy, spend at least 5 minutes a day. 10 minutes a day. Be informed, because we are in the long-term wealth preservation, right? One of the important lesson in this book is always focus on long-term wealth preservation. And the 11th lesson, continuously evolve, continuously improve yourself, and be a lifelong learner. Right? Be a lifelong learner. Consider yourself as old. Consider yourself as aged when you stop learning. A person who always learns is always young. Right? Is always young. And lastly, the 12th important lesson, develop a trading mindset. Right? Develop a trading mindset. So you always need to block those opportunities when they are available. Yes. If you see specialty chemicals right now, for a very long period, that was consolidating for almost 1.5 to 2 years. But right now, when they are showing strength, even if we apply the Darvas box technique, what we have learned today, right? When majority of the specialty chemical related companies, when they are forming that base, when they are forming that box, whenever they are breaking out of the box, whenever it is breaking out, those should be your entry points, right? Those should be your entry points. For example, Chambal Fertilizers or even Aarti Industries, if you see, majority of them, when they are forming a base, that breakout should be your triggering point for entry. You can watch out for the price and the volume, right? You can watch out for the price and volume. So this is the summarized version of the book, How I Made $2 million in the Stock Market by the author Nicholas Darvas. So the key learning, when you follow a system, when you follow a process, when you stick to it and ensure you follow one important rule in your entire investing or trading journey is add to your winners, ride the winners more, and cut your losers as soon as possible. Follow your strict stop loss. So now let me know below what are the key lessons you have learned, right? Just let me know one important lesson which you have learned from this below, or 3 key important lines. What are your key takeaways? Let me know below.